just like in investing. Hello and welcome once again with our friend Craig. As I told our friends over on Blossom that I'm going to be going live with a actual living and breathing Canadian. So here he is. Yeah. How does it feel to be a Canadian?
Like it always does. I don't know.
There's no good answer for that. It's ridiculous.
Yeah, right. That's like, what was that one you always say to somebody? What's it like having an accent?
When I talk to people from England, I say, what's it like having an accent? That must be so strange. Yeah, exactly. I know. Only in my mind. My wife
from being Canadian since I've lived in Florida for the last 8 years now. So a little bit out of touch, but I'm still Canadian through and through.
You're practically a Florida man. Yep. I'm going to say hello to everybody. Hi, how's it going? God, real quick rundown. Shannon right here early, right off the hop. Shannon, Chris, Rick, Frank, Pat, and Steve. So yeah, happy Mother's Day to you too, huh? We were just talking about the stuff we do for our mothers. And for me, it's like a Seinfeld episode around here. I clean the grill. As I was telling Craig, the last time my wife went to cook some burgers, the grill started on fire. And I was like, oh, that's probably because we haven't cleaned it. And that's how we know when it's time to clean it, when it's a 3-alarm fire. So I cleaned it today. She ran to the store to get some jalapeno Angus burgers. And I turned it on and it ran out of gas. So no propane. But anyway, that has nothing to do with investing. But, you know.
This is the thing we got to do. This is what the husband's got to do, is go through the list, clean the grill, fix something.
Yeah,
that's gifts we're saying. Yeah.
So I hope all of you celebrated with your mothers, or called them at least, and or your wives or mistresses. I don't know. You got 2 families, a secret family too. You know, just so. Oh, I got it. Yeah, how about this, Rich, with the Pope. The Pope, right? The Pope's from Chicago. I'm not really religious, but you know, it's still cool, I guess. I mean, everybody knows who the Catholic Pope is. So, I don't know. Congratulations to him, I guess, and it's his job until he dies. I don't think
an American Pope. That's crazy. That's cool.
It's the first one. The first one. I think he's the 266th Pope, maybe.
I don't know.
It's a whole Pope on a rope. So, yeah. I don't even know what that is, quite honestly. It just popped in my head. That's yeah. I think it must have been a soap that was shaped like the Pope because it was on a rope.
It rhymes.
I know. This is a nutty, right? These shenanigans and hijinks we got here. But now we'll talk of substance. We'll go through some news. And I want to get your guys' opinion, because the last video I dropped on everybody was about, so I wanted some foreign exposure, and I'd love to know how you, Craig, think, and people in the chat, about a lot of, so like Warren Buffett wouldn't be too concerned with trying to own a foreign company. He would, he owned Guinness. He wouldn't rule them out, but he thought there was enough foreign exposure from companies that were here in the United States, that they're global. They do business all over the world. So, but still, there's a thought that U.S. stocks are almost the most expensive they've ever been, and international stocks are actually, by a lot of valuations, forward earnings, they're pretty low. So we could see a period. U.S. stocks haven't always outperformed, and it's been a hell of a long time since they've underperformed international. But there's a thought, whether it happens or not, I don't know. But there's a thought that international stocks could outperform U.S. stocks for the near, maybe long future, maybe never. Nobody knows what's going to happen. So yeah, you in the chat, and Craig, what's your take on the international stock thing?
Yeah, well, they've certainly started off the year well, and they've continued to do well through this period. So if you had invested them, like, a lot of people have been sitting on these things forever, just waiting, but it's kind of like you're rewarded for doing that for so long. So it just shows that when something like this happens and a big change happens, that it pays off to have some further diversification, and it's I've seen it firsthand, because like I told you before, like I DCA every 2 weeks into international fund, and I've just done that forever. Not a ton, just a little bit, but it's there, and now it's finally performing. And then I also have a lot of I have a big Canadian ETF that all of a sudden it's outperforming the S&P 500 for the last year, and recently, definitely, yeah, for the last year it's actually ahead, and it's a dividend focused one too. It's like I see it as like Canada's version of SCHD. It's called
Yeah.
VDY. VDY. It's called.
Okay, I was just going to ask you. Beat me to it.
Mm.
Yeah. So I bought VIGI, and if you didn't watch the video, the too long didn't read version. Do you say that if you're talking about a video you made? I don't know if it works like that.
What'd you say? I missed it.
The TLDR, the too long didn't read version. You know how people will do it's trying to give everybody the cram them out of information as quick as they can. But yeah, I bought VIGI, and as I'm going through stuff, it's supposed to be a dividend growth ETF, VIGI, but like VYMI, right? It's the international version of VIG, exactly. Kind of like the one I want to talk about, SCHY, is the international version of SCHD. But yeah, so VIGI by Vanguard is supposed to be the international dividend growth ETF, but VYMI supposed to be the high yield one. It's had 1% higher dividend growth. They both came out in February of 2016. It's had faster dividend growth, better performance. It has like 1,500 holdings though. So it's real weird that VYMI, the high yield, has performed better than the dividend growth. And I'm actually now leaning toward maybe just going SCHY because I'm a big fan of SCHD. And, I've read a little bit more, thought about it a little bit more, and I don't necessarily like the 1,500 holdings that VYMI has. That's the high yield. VIG, the dividend growth one. VIGI has 354, I think. And then SCHY is like 130 something. I think 132 or 34. So it's really concentrated. And I think that could be better because, and I'd love to know your guys' thoughts and yours too. I mean, would you rather have more, 1,500 companies in your international ETF or 134, call it?
Right. I mean, as soon as whenever you've got like 100 or more, I mean, really, those are pretty diversified, right? Like, really, how much more do you need? But then the other side of it is these are international companies that we don't know as well. So maybe it would help to have even more and just kind of like get that average. Like, you have a better chance of just getting that kind of whole average instead of being so concentrated. So I don't know. Like I've looked at VYMI, which I own, and SCHY. There's also it's interesting. All the dividend growth ETFs that we know, there's an international version. Like there's even the DGRO one. There's an iGRO. So there's even like Devo. There's iDevo. Like you name it, it's there, right? And they use the similar methodology. So it's kind of like if you like the US version, then maybe just invest in the international version. But funny enough, I'm in the VYMI camp and not the SCHY. But I could have gone SCHY. They both perform super close. VYMI has done recently better, but SCHY is doing great right now. So that higher yield international wise has done really well. And there's a lot of studies that have been done over the years that high dividend stocks actually outperform in the long run, period, which is crazy. But if you look it up, it's true. Like I've seen Meb Faber's done a lot of studying on this, and it's out there. Like the high yield, if you just took the highest yields of stocks, I'm not sure of all the filters that were used, but I think basically you take the high yield, sort it across, and go like back, 100 years, they've done better. So maybe that's the way to go to internationally. Just kind of keep to the basics and go for it, right?
Yeah. So you're not buying SCHY. I hope we don't. Hope they don't pull your SCHD card over there.
I would. Though. I totally would. There's nothing. I like it. I like it a lot. But I do. I kind of went with the thinking that like when we don't know these stocks as much, that just one that has more holdings is probably better. But it's like so similar. At the end of the day, they use very different methodologies, but the returns at the end of the day are not that different. I don't think they'll be that different over the long run.
Yeah, it's very close. Their performances are similar. So, but yeah, like I said, I'm probably gonna I'll decide this week, but I think they're going to be VYMI or SCHY. So I'm going to do a little more research. But yeah, I want to turn this to real quick because Josh brought this up, I think, at the end of last week's live stream. But NextEra Energy, do you have any thoughts on it? I'll pull it up on.
I own it.
Here.
I own it. It's it's really interesting is I just started buying more of it recently because I haven't bought in a while because it's down a little bit. And then I decided I'm going to buy more, and it just took off. Like it just jumped back up. It's still way under what it's been over the years. Like it's always been the one growth utility stock out there. Like, and consistency with dividend growth, like 10% every year, like is incredible. And it used to pay under 3 and now it's over 3%, 3% starting yield. So, but then I looked at the performance and I didn't realize that those other ones that a lot of people talk about, like Southern and Duke, which when I first started investing weren't doing as well as NextEra, are now killing it. I'm like, oh wait, things change. Things can change up. But it just feels like this one got really overvalued because a lot of people were jumping into it because they're the biggest. They're usually the top holding in every utility ETF. So when the funds start going in, it's going to get the biggest boost. So it gets overvalued quickly, and it has a lot of the new stuff in it too. It's got like the renewable energy and that sort of thing. So people got really excited about that in 2021, 2020. So it really got overvalued. So now it's kind of corrected, and things look good going forward, I think. So I'm holding it. I like it.
Yeah, and this is one that I probably should do more due diligence on as I'm looking at the numbers here. I know that they did go heavy into the renewables, and somebody in the chat might put this in. I think that was one of the knocks, is that they're not seeing the return on the renewable investment that they thought they might be. But look at that dividend growth, 11% 10-year CAGR, almost 30 years of dividend growth. And they go ex-dividend June 2nd, so that's right around the corner. But yeah, and according to Simply Safe, they think they're potentially undervalued by at least $20. So that's, I mean, by all metrics, as long as the business remains profitable, I don't know. I don't want to speak too deep because I've never gone deep into NextEra Energy. But yeah, the earnings payout ratio, we look at that.
Sorry, I just want to say it's an exciting utility stock. Like that's why. So it can get overvalued and like it has big swings kind of thing because it's seen as a more exciting because of the growth.
Yeah, high single digit earning per share growth almost every year, and some years it gets double digit teens, or mid teens. But yeah, I don't know. I mean, dude, just as I'm looking at all the fundamentals, and again, this doesn't tell us exactly where it's going. But from the fundamentals, I don't really see anything. Net debt's come up a little bit, but quite honestly, Josh, I mean, I think you're not going to go that wrong with it. And they do, Simply Safe does give it a safety score of 90. So yeah, dude, I don't think you have anything to worry about. So it's, I don't know. I'd like to look at a chart too, see if it might have hit a bottom or so, but good, huh? Gets your vote of approval. I love it. Pat, congratulations, man. He turned 70 yesterday. So, dude, salute to you, man.
Happy birthday.
I love it. Hey, this reminds me of something, and this is going to be out of left field, and feel free to put this in the chat. You can lie because I have no way to fact check any of you, but one of my childhood friends' grandparents just popped into my head, and I looked up to see when he died because I didn't remember. He was born in 1902. So I was like, that's pretty cool, but I can top that because my grandparents raised me and they were older. My grandpa's sister was born in 1898, and I hung out with her a few times when I was little. So I've actually met somebody from the 1800s. Have you had that pleasure, Craig, or anybody else in the chat? Can you top that?
So. No, my grandmother was born in 1913 or 14, so that's the oldest person I know.
Too. Yeah, he was 19, but he was the baby. So he was the baby at 1914. So I don't know what does that have to do with investing? Not a damn thing. Just hey, it's a fun game you can play next time you're bored at a party somewhere and you want to interject something crazy. This is a dig at you. Go Panthers. Hey, we'll see. I'm pulling for the Buds, man.
I like
the Buds your team.
Yeah, they have to be. I lived a lot of time in Toronto, but I like the Panthers too because I live 20 minutes from them now.
Oh,
Like
you
I
got
go to
that.
the games, but I go when the Leafs come down, and the Leafs. I'm bad luck for the Leafs. The Leafs lose every time I watch them. The first playoff game I watched was the other night, and they lost. They were up. They've been up 2-0, and I watched the first one. They lose. So
You
if you
got you
if you
got
want
that.
to win, you want me to watch.
Craig's got a Toronto heart and Miami, Florida blood in him.
Mm-hmm.
I don't know how that didn't work so well. For those of you, you might not even know this, but I'm a big fan of Morrissey. He used to sing for the Smiths, but he has a song called "Irish Blood, English Heart." So, meaning that he's Irish blood living in England, which I'll be going to. So it was the analogy died out there, but let's revive what Manel said. Thoughts on UNH, dude? That's been falling. I'll pull them up too. What are your thoughts on UNH? They've caught my attention now in like $380. I don't know if you've seen that.
Yeah. It got my attention, a few times over the years, like seeing it drop. And then when I keep seeing it, like something new happens again and again. To me, it's gone to the too hard pile for me. Like I don't want to deal with it. It's just too much going on there. There always seems to be something. I don't understand it enough to
well,
get
the
into
market
it.
is the market is clearly, when we get to the dividend yield, I don't know if you can make out from this little card here, but the dividend yield is that's nosebleed above the 5-year average. So the market, and here the price is $380 and they expect the low end $489. So the market is clearly telling you, hey, big waving red flag, something is not right here. But for whatever it's worth, they have a 90, very safe, A+ credit rating. Let's get a couple more stats here for you, Manel. But yeah, and you guys in the chat, please give your opinion too, right? We're not experts here. We're just like all of you. So yeah, almost a 20% 10-year CAGR. Just
I mean, to me, it does scream like this is a big established company. Like this is one of those things that, like, when it's down, everything negative that can be found will be brought up, right? And it scares you out of it. But this tends to be the kind of opportunity that, in the long run, you're like, what was I thinking by not investing? Just highlight. I'm just saying highlight, right? Like, because I tend to jump in on these things. I've never seen a falling knife that I'm not interested in.
Same here. I get to it. But you know what? There we go. So this might be one clue, is that they're going to raise the dividend. They should raise it in June. So we should be getting an announcement here. It'll be interesting to see how big of an increase they give. Could be a vote of confidence from the management. But yeah, I mean, they look, if it's according to simply say, very, very undervalued. But again, I think change is coming here. I know some people don't like it, but
there was just something announced tonight about drugs being cheaper, and who knows what happens with that.
So my thoughts on that, I saw that the executive order Trump's going to sign about, I don't know what he's going to make Tylenol 80% cheaper or something, but I have a lot of thoughts on that. But as far as that relates to like UnitedHealth, I would think like cheaper pharmaceuticals would be good for them. That would probably help their profit margins. But they're free. Their payout ratio is super low. Every year they predict over the next 12 months that their earnings are going to drop a little bit. But yeah, I mean, it just the fundamentals look so solid. And again, but this is going to be, they still buy back shares, sales. Every year sales are higher.
How much is UNH like we use UNH because that's the work, that they choose, and we're just along for the ride. Like,
yeah, I know some people at my work aren't big fans of it. We thankfully we're pretty healthy. We haven't had to use it too much, but Manel, from the fundamentals, it looks fantastic. And believe me, I get tempted by it every time I thought it was tempting at 400 and now I'm seeing it at 380. And I'm like, am I being stupid not buying it here? But I don't, but I haven't dug in. You got to try and look through the windshield and say, what the hell's going on with this company that the market hates it so much? So
I know Ari's in it. Ari likes it.
Oh, you're right. He is. Yeah. I heard, I did hear him on the deep end say that.
Yeah.
What's up? Good morning, Korea. This is a Chicago guy. He's in Korea right now. Very cool. We'll not be in that part. 29 days out, Craig. We're going to London and Scotland.
Nice.
Holy cow. I told my daughter, I was like, guys, I'm like, you better damn enjoy this trip because you're probably going to get less of an inheritance because of it.
Yeah,
but we're
right,
going to
right.
make some memories together. So I'll share
Yeah.
the number with all you guys.
It'll be
Right
worth
now.
it.
We have our flight booked, all the hotels, a couple excursions. Like one is like an estate with a Harry Potter tour. Dude, we're taking, there's a train from London to Edinburgh. And it's, I know, I looked it up. That's how they say it, Edinburgh. It's called the Liner, LNER. And it's a 4.5 hour ride from London to Edinburgh. And I upgraded for the premium first class. That's $540 just for that train ride for the four of us.
But we get food and drinks.
Oh, food and drinks. It's all you can eat and drink. So I told my wife, I'm like, well, I don't, I've been, if you in the chat, have you ever done this when you have drink included and you paid for it and it's all you can drink? I'm like, well, I'm going to get my money's worth. And then the next day I'm like, that was stupid. I get my money's worth. Yep. But, yeah, anyway, $11,187 we're in for it right now, but the flight was $7,000. So, you know what? That's what I'm saying. My net worth dropped by $11,000, but we've saved for it. And for those of you that don't know, I've talked about it. For almost 40 weeks now, we've saved $300 a week really cool. In anticipation of this trip. So
that's so
actually, everything we saved from that, we were able to. So it's been a wash so far. But still, dude, when you've got like almost $12,000 sitting in a high yield savings account, and then it's gone, and then I look at the Empower, my net worth dropped by that much. I'm like, face. But,
I don't believe it. You guys are gonna have a blast. The memories created, can't take that away.
Yeah. All right. It's a couple more international from Suts. I love it. XDIV is another great. Oh, ETF. We were talking about internationals. I don't know what XDiv is. That almost sounds like a ex-dividend date ETF. I don't know anything about it. This is the first I've ever seen that ticker. So Suts, correct me.
Suts. Do I know you? I think I might know you. You might be related to me.
That'd be fun. Tell us. I'll get caught up. All right. Let's see. Yeah, Frank. And I did, from reading all this, when you see the variable rates on international dividend ETFs, looks like there's cuts. A lot of the international companies, and I think it would benefit a lot of U.S. companies to pay a variable dividend. So if, earnings, profit.
I don't want to do that. I couldn't get it.
Uh-oh.
Put that out there in the universe. You're right, but don't. I don't like
Well, yeah, I know.
You like the surety of a dividend every quarter and going up every year, not this variable crap. Come on. Shh, quiet.
All right. Oh my God, I'm so far behind. I got to get. All right, let's blaze through here. So if I pass up anything that was really important, Swami sticking SCHY.
It's a good one.
Say it again for Steve. What was the
VDY.
Canadian?
VDY.
Yeah, VDY. There you go.
It's a Vanguard dividend yield.
Philip Morris outperforming the market. Yeah, that's been a fun one.
The greatest stock in the world of all time.
Oh my God, Josh, you're in the Space Force? That is awesome.
Oh, cool.
Hey, there he is. We both had the pleasure of talking to Dan. Okay, good, Chad. I think I should laugh at that, but kind of be a little offended, but not.
I don't know. Somebody called me a Chad once, and I was like, I don't know if that's a compliment or an insult. I'm not really sure.
Hold on. I got to Google that. Hold on. Pause my reaction. So here we go. David beat us. He had a great aunt that was born in 1872. He met. I love it, man.
Nice.
That's beautiful. Same thing with Michael. That means you're old, David. Come on.
Yeah,
if you had this is a fun game to say, how old are you? Right.
Yeah.
Because my daughters, fun. Yeah. Actually, my 18-year-old met my grandma who was born in 1919. So I was going to say, that's not too bad, They're playing now. Oh, that's right. The Buds and the Panthers are playing.
Oh, that's why people are talking about it too. Okay.
Yeah. ADM, you and Cisco, our thoughts. Gil, yeah, maybe we'll put a pin in that one, but here we go. Real quick. Archer Daniels Midland. I don't know who's going to unseat them because we need food, right? I don't know. The AI is not going to thwart the food industry. we need food. That's ADM. So I know they've had their accounting issues and whatnot, but
It got added
you is
to,
clear secure. What's that?
Oh, that's I was going to say ADM got added to SCHD this year, so we've got it in there.
That's right. That's right. You is clear secure. That
Right.
one, I sold out of that. I know Ryan's still in it. There was a short report put out on it, and my nerve around it, what made me nervous was that the TSA could easily replicate what they're doing, and that would just eliminate them. It could be very rapid, and that just kind of made me a little nervous that the TSA would undercut them and say, well, we'll offer, we're the TSA and we'll offer cheaper and better service. And that would just destroy U's business model. So whether that happens, Gil, I don't know. Say that again.
Like there are other options for that sort of thing. Like I have what do you call it? Like the TSA pre-check through a Nexus, and I have Clear. A little overdo it, but yeah, and I just go to the line that's shorter. But I don't use the Clear that often, actually. And you can only use it in the US, but I guess they're adding a lot of other services to it. So I guess that's the story, right? Like they're adding, to get into NFL stadiums and all sorts of things. So you can imagine all the different places that might pick it up. So I think that's the story on it. Ryan knows a lot about that, right? Ryan
Yeah. And then Gil's other one over there was Cisco, CSCO. Fun fact, I still don't think they're back to where they were when the dot-com bubble popped.
They've been solid now.
They're in SCHD.
They are.
Right?
I mean, it's just steady. It's boring. It's boring and steady. It's not going to fly up, but it's not going to rocket down. It's going to grow a little bit. The dividend's going to grow a little bit. It's going to pay a solid dividend. It's just one of those like stalwarts. And yeah, they've been doing better over the last couple of years, though. So it's been good. If you've been in it, it's been good over the last little while after being very, very slow.
So Gil, I would say if you're playing the game, which like they did on Sesame Street, which one of these kids is not like the other, or which one of these things is not like the other? I think it would be you. So if US and China sign a deal tomorrow, how high do you think the market will go?
It's already up right now. Have you looked?
I did check pre-market.
Dude, it's green. Things are up.
What's the percent?
Good question. I don't have that in front of me, but
I could pull up in a minute.
I just looked at Robinhood shows like overnight stuff, and there's stuff is up like 4, 7, like all of what's individual stocks are up big time.
Sut said HHL for exposure to UNH for him. I don't know what HHL is.
HHL is the new one by what's his name? Shoot. The guy who bought Netflix and sold it. He was in Chipotle. He's in Nike. What's his name? Bill Ackman? I think it's his.
Okay.
Right. I think somebody check me on that.
Let me get caught up here.
Or whatever, a fund that he's not a hedge fund, but an ETF that he's running, and he wants to be like the new Berkshire. I think that's kind of the story.
He wants to be a collector of. Okay. Frank loves UNH, 15 to 20% dividend booster that year. Yeah, that would be crazy. That would be a huge vote of confidence from the management. So that should be coming like soon. They should be announcing that. Gorilla Nurse, you do know your pharma. So Bristol Myers, Merck, and Pfizer all getting beat up. Yeah, and I don't think it's going to get any better for the pharmaceuticals, right? They were down aftermarket on Friday when I think we got wind of what Trump's doing tomorrow morning. But we'll see. We'll see what's going on. There we go. Defense Dad as SCHD as his number one holding. Gant likes iGrow. Oh, iGrow is the international version of DGrow. Yeah, that's correct.
I mentioned that too.
All right. See, this is what I got to get better, Craig, because I make a joke and then 5-10 minutes later I get to the person's response. Like,
it is Bill Ackman.
Okay.
HHH. Howard Hughes Holdings Incorporated is called.
That's a weird name to put on that. I don't know where I'd go with Howard Hughes. Josh is interested in how the market's going to react when it opens tomorrow from the news. Yeah, it'll be up. It's obviously up. I mean, we could look at
Does it hold, though? Just how long does it hold? There's a lot of this, like, it goes up and people sell that rip, and then goes down, people buy the dip. There's a lot. Like, I've heard traders say, like, this is the greatest market they've ever seen. Just loving it. Well, I listen to a lot of traders. They're fun. I enjoy it.
That was one of my thoughts is when Trump immediately, right? He had the Liberation Day thing, and everybody freaked and sold. Like, this is all self-inflicted. All he had to do is just one day just say, forget it. Everything's canceled. Back, as you were, as we said in the military. And then it would just, and then he could say, look, I made the market go up, I don't know if that's true or not, but.
I like this comment from Suts here. I think we're brothers, me and Suts.
Like real life brothers, or like
I feel like I might know this guy.
So like brother from another mother type thing.
It's my nickname. Suts is my nickname.
So blood brothers.
Yeah.
Okay. That's crazy.
But I like the thought of using SCHD like a bond, like an equity bond. Like, you've ever heard Warren Buffett? You've heard him talk about equity bond. Like, yeah. But you get the capital appreciation. It pays you a steady dividend, a solid dividend, but it grows. So it's like a bond on steroids.
There you go. I'm going to throw this on for those of you wondering that don't have access to the market futures. This is just investing.com. So y'all can go to this. Close that. We got, the Dow, stupid. It's antiquated. Yeah, there we go. The VIX is down almost 5%. The NASDAQ's up almost 2%. So everything else is green. All the foreigns. Yeah, crazy. China's down a little bit, but or no, I don't know what. No, the Hang's H shares. I don't know what that is, but the Hang Seng, right? That's the Chinese market. So,
yeah. Anyway. Speaking of international, I saw SCHY was up big time, which is wonky too. It's a little wonky in the after hours, but it's up for them 2% in after. That's a lot. It's up 2%.
Yeah.
But that can change so quickly. You really have to be careful with these after hours because it's very low volume trading. So one big buyer could throw that right off, and you got to be careful, very careful with giving.
Oh, you should see NextEra, man. Talk about, they only have, I think they're getting close to being under 30 million shares, and 98%, and this is something I'm still digesting. 98% of their outstanding shares are held by institutions, and I know some investors look for low institutional ownership. But sometimes in the pre-market, it's crazy. Their stock will be up or down $10, $15, and then I'll freak out. I'm like, I'm rich, or oh no, what happened? And then the market opens and it's like a buck off from where it closed at the day before. I'm like,
really interesting.
Pre-market is low vol. Like you nailed it, low volume. All right, let's do some news if you don't mind. We'll do some because it's the halfway now. So this is on Simply Safe. I'm sure you've probably seen a lot of it once I pull it up.
Love Simply.
Yeah. Let's see. Let me go here. There's a lot, so I'm going to have to go quick on this because we could spend the whole rest of the show. You can see all this, right?
Yep.
So anybody watching, I always say, pause the video because I'm going to go quick here. And at least with Simply Safe, they give you their opinion if something could be overvalued and their safety score on these. But Cardinal Health, super low growth. And I can tell from this they don't grow the dividend fast. So 1%. Cardinal Health, this is mine, Main Street Capital, 2% raise. Plus they're doing another 30-cent special dividend. So that's going to be like an extra $45 plus $9 for us because we have 150 shares. But they could be overvalued. Becton Dickinson, they reaffirmed their safety score of 91, very safe. I get this confused. I think Starbucks' previous CEO, Laxman Narasimhan, I think he was CEO of BDX. It was either BDX or one of the other ones over there in England. No, I think it was the one that owns Trojan condoms or something like that. I can't think of the name of it.
What's it? Oh man, what's Church and Dwight?
Oh, you're right. It's not that. It might have been BDX. Somebody could Google it real quick. Laxman. They refreshed their outlook on Welltower. Won't get in any of those. Reaffirmed their safety score on Sunoco, which is funny. They're still around. Insperity, they got a dividend downgrade to 70 safe human resource company. Dan, if you're still watching, man, you brought it up when I talked with him. He said, yeah, any human resource companies be very nervous around right now. So there's the BCE. Oh, thank you. Happy Mother's Day for bringing me my tea. I got by. It's Wonderwater. You want to say hello?
Hello, wife.
You didn't think I was gonna.
What?
There she is.
Yeah, hold on. Let me shut this off. Wait a minute here. I got a guest. How do I do this? There.
Well,
like
I
that.
don't have to stay. You have a guest. Hello, nice to meet you.
Hi,
She can't
nice
hear
to
him,
see
but
you.
he said,
I can't hear.
yeah, it's in my ear, but
Okay.
All right. Well, thank you for the tea, even though I got my buy Wonderwater. But, anyway, so there's a camera. It's confusing me if I'm all discombobulated. Let's get back to that news and finish it up real quick. BCE. Oh, we got Canadian stuff here, Craig. The next few. BCE cut their dividend 56%. So
that is one old stodgy company right there.
Yeah, and actually, I want to show this one real quick because I remember talking about this a while ago, and I didn't know how they were doing it. So they kept raising the dividend, but I know I'm going fast here, everyone. What I wanted to show you was this here, the the earnings payout ratio and the free cash flow payout ratio. I don't know how they got away with, since 2020, it's been over 100% for the earnings, and then free cash flow was since 21 over 100%. And I was like, I don't know how they can do this. So apparently you can do it for a little bit, but eventually that's why those companies that are over 100%, I'm like, man, that makes me nervous. So BCE, we saw that one coming, I guess. Sun Life, there you go. Another Canadian company, raised their dividend 4.8%. I know nothing about that Canadian insurance company. Do you?
I do. Yeah, they're solid.
Did you ever use them?
Some of those companies have been around forever, and they're just always going to be around. Like, they're solid. Mm-hmm.
Another one, solid, Pembina. They used to pay monthly dividends, but they do quarterly now. So Midstream, there you go, Midstream company. Midstream, remember, is they're transporting, storing the oil. Upstream is when they pull it out of the ground, and they pull it out is upstream, store and transport is midstream, refining, I think, and bringing it to the pump is downstream. And then TELUS raised their dividend 3.5%, 22 years of dividend growth. I know, it's like all the Canadian companies here. I think that might have been it for the Canadian ones. A couple more here, everyone. KLA raised their dividend 12%. So I don't know anything about them. The chip material company. Do you know anything about KLA? And then last one here, CODI, ticker CODI. Compass, they are probed over financial irregularities. The dividend outlook dims, and they got downgraded to 40 unsafe. And that's some news from Simply Safe. So I'm going to take a sip of my buy, which, by the way, buy is owned by, it's reversed. Oh, I didn't even realize, dude. I'm backwards. Look at my shirt.
It's not backwards to me. No, it's not.
Really?
No, it's not.
Oh, yeah, I guess not. I'm looking at my phone. Weird. I'm seeing it backwards.
No, everything's right.
I don't know. I'm backwards. Let's see. Good. I love it. You were chatting. Thanks, man. That's what I need. So yeah, anyway, so what, if you're just jumping in or just popping on, tell me, what do you think is the best international dividend ETF? Because I'm looking at VYMI and SCHY. So I would love to know that. Brett's main holding is currently SCHD. Nice, Brett. But he's also intrigued by OMAH. Jeremy from Dividend Stockpile talked to the fund manager and CEO, I don't know what they call him, from OMAH, the company that. What do you think of it as a companion investment? What do you know anything about OMAH, Craig?
I just think of Peyton Manning every time I see it. Omaha, 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 Omaha.
They're going to bring him back, I hear.
It's that, okay, I don't understand. So it's based on Berkshire Hathaway, right? So that's the underlying holdings plus some of the holdings, right?
Yeah.
And then they're writing calls and all that sort of thing, like a lot of these other ones. How do you get a 15% yield from selling calls on Berkshire Hathaway and Coke and the stocks? That makes no sense to me. I get it when you're writing calls on the SPY and on the QQQ, there's lucrative calls available, but on Berkshire, it's not volatile. I don't get it. That seems a little wonky to me. I haven't done the research, so someone could destroy me and say blah 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 blah. But that just sums off there to me. 15% yield, like I don't know.
I'll show you, and
you can't have it both ways. You can't have like supreme stability and then 15% yield at the same time. Like it doesn't. Something's got to give.
Yeah, it's not for me. So interestingly, Tidal Trust 3, I don't know, but Tidal, that name TIDAL, is yield max. So I think Tidal, I'm trying to remember how it works. I think Tidal might underwrite, or they're like the engine behind yield max. I think they're the engine behind yield max.
There's a different, I can't remember, you just used the word for it, but Tidal does a lot of
underwrites.
Yes. And then there's fund managers that are separate, right? Yeah. So like, yeah. So
and again, even that right there shows a little bit of confusion with it. Like there's multiple entities, but anyway, so so you got derivatives going on, but it also says stocks of companies across earnings. So I don't know if that's just generic, but I don't know if this is to OMAH. So it might be a fun one to do a video on, but yeah, long strategy and derivatives such as options, and they invest in value stocks, but they also invest in short-term U.S. Treasuries. So here we go. They're tracking a fund or an index, the Selective Vista Shares Berkshire Select. So you see what I mean? It's you got
that's their own
Tidal
index.
Trust. Tidal Trust is Vista Shares, and this. You know what, man? It's just I'm with you. It's God bless you if you guys understand it, and I hope it works out. But
I mean, it's got beautiful marketing. Like, think of the marketing there. Own Berkshire Hathaway and get 15% yield. Like, it sells itself. But I don't see how that can be sustainable. It just doesn't add up. Something doesn't add up. Maybe something I don't get, but.
The problem with a lot of those is people get attracted to the yield, and I feel it's preying on people that are just looking at the yield. And that's why I always show that just do the total return with all those yield max funds. Mm-hmm. Very few of them outperform the reference asset since inception. I don't know. Somebody told me, you can't look at it like that. I'm like, really? So if I would have just bought the Netflix, Netflix versus NF, whatever the yield max version is, at inception, Netflix doesn't pay a dividend, and then the yield max Netflix fund would have like a crazy high yield. It still underperforms total return basis. Like, it's crazy to me. You would have more money. Yes, you're not getting the dividend income or the distribution income, they call it, because I think there's a big mix of. I was just talking with somebody about this YMAX, and if you guys are listening, so YMAX is yield max, and they were saying how they got all their money back in 11 months. But when I look at it, it was at $20. Now it's at $13. So the share price has dropped $7, but they've paid out like $7.60 in distributions. I'm like, are they just giving us our own money back here? Because
some of them have over 100% yield.
Right. They're giving you your own money back.
I know, and I understand. There are someone who's saying maybe they sell calls. Yes, they are selling calls. They're selling calls. They're selling put credit spreads. They're doing all sorts of things.
And a 1.29% expense ratio on that one for the privilege of them underperforming like everything.
Mm-hmm.
Yeah, it had like a.
Some of them are better than others. Like yield max worries me, but there's other like. The like JP Morgan, the Goldman Sachs, like to me that's a whole different basket, right? Like the JEPIs, the JEPQ, the SPI and the QQI, like those are more reasonable to me. Still some questions because they're still fairly new, but I've looked into. There's an index called the BXM, I think it was, that's been around for a long time, and it's used that type of strategy and it's done well. It always slightly underperforms its underlying index, which is the S&P 500, but it's a few percentages under. So like if you want to do that, if you know that and you want that income and can use it, and then it's more sure in like tough times, in volatile times, it's more sure, then that's the way to go. But these ones where the NAV erodes like crazy and they're paying like 50% or higher yields or 20% or higher, like you just can't have it both ways. There's going to be a trade-off. There has to be.
Yeah, there's no free lunch in the market.
Exactly.
Is this Alexandra Real Estate? We'll look at this for Trevon. Yeah, I think ARE. We've talked about them before. They're solid. They're well, here I'll pull it up real quick, Trevon, and we'll just go like not Blazing Saddles. I don't want to say that. I say Blazing Fast, I think, but then my brain was like, I think you can't talk about Blazing Saddles anymore.
Yeah,
have you ever seen Blazing Saddles?
No, I know the name, but I've never seen it.
Really?
I know the name.
Dude, it's a classic movie. Mel Brooks, real good. But here you go, Trevon. Alex Andrew Real Estate. They do like life science, I think. Life science and technology campuses. But yeah, 7% yield. Let's see if that's sustainable real quick. Trevon, I'll leave it up for a second. You can pause any of this. They cut their dividend during the last recession. That's interesting. There you go. Dividend cut. See that? But it's been steady Eddie. But let me see the
safe score. That's good.
Yeah, they look way undervalued too. Wow. Yeah, that's again, Trevon. Market is telling us something's wrong here, or there's a big red warning flag, and you got to understand what it is. Again, I haven't really dug into them. Their AFFO ratio is low, so they can easily pay that dividend.
A big part of REITs not doing well is just higher interest rates, right? If the interest rates come down, they'll pick up.
I guess, yeah. And they don't dilute like crazy. Yeah, I guess a lot. Well, like I said, if when you're looking at a REIT, if they're diluting the shareholders, as they call it, this is how a lot of REITs bring in more money to invest. If they're giving out more shares, they damn well better be growing their sales and the AFFO per share, which, you don't want to see that when it drops off. But I guess so. That was COVID, so that was a black swan. But I don't know. I guess, Trevon, you need to go on Seeking Alpha, read articles, watch YouTube videos about them, try to familiarize yourself as much as you can with the company. And, it's really just trying to predict the future with these. Like, debt doesn't look too bad. But, yeah, Trevon, I don't know enough about it. You really need to listen to management, see what their plans are, what they're trying to do.
Russ, you ever listen to that? There's a guy who specializes on YouTube on real estate stuff, UC Uskala or something like that.
Oh, UC Uskala. He's Finnish, dude, I believe.
He's got some good content on, and he's talked about that one. I think he likes it. Look that up, Trevon.
Definitely check out UC.
He's really
funny. I assume he's Finnish. I'm not so sure though, because I've never asked, but I'm stereotyping because there's been a lot of UCs in the NHL. They're all from Finland. So like UC Markkinen.
Right. Yeah, you're probably right.
Oh, that was an Ollie. I was thinking of Ollie Jokinen. I liked him. He played with the Panthers at the end of his career. But UC Saros played with the Predators. Okay, everybody, for the rest of the show, Craig and I are just going to see how many UCs that played or are playing in the NHL. No, we are not going to do that. Why only midstreams have a K1? Upstream and down are qualified. Up and down are qualified. Just their tax structure, John. I don't know why they're structured that way. Good question. Sounds like a good question for ChatGPT. Yeah, honestly, John, I've never even thought of that. But yeah. All right. BRKY. Frank was asking if you were talking about BRKY. Oh, that sounds like something that would make Charlie Munger roll in his grave, right? Leveraged derivatives on Berkshire.
Right. Oh, when we were talking about Omaha, I guess, right?
Yeah, and then I think you mentioned there was like B something X, or you were trying to think of the ticker, and I think Frank was just saying, is it BRKY? Oh, is that a yield max? Oh boy.
Oh, it's a yield max on Berkshire, maybe.
Oh, Jesus.
Maybe. BRKY.
You know what? I'm gonna go next to I'm gonna go to the next shareholder meeting and try and ask a question to get them to get Warren to comment on BRKY, and if I should.
Or maybe he's suggesting they make one, because I don't think they have BRKY.
I don't know, but I wouldn't put it past them to do that. Here, LTL said, I'm like Craig. I buy everything. I own IDVO, SCHY, VYMI, VIGI, and IGRO. It's fun to hold them all. And if I get hit by a bus, my wife can sell them in a few clicks and consolidate if she wants. Yeah, I don't know, man. You do you. If that's what makes you happy, I love it. But
You know
I
what?
think I would consolidate. I think you're
Yeah,
getting
I think there's
over.
different schools of thought on it. It's like you can look at it as like you're making your own ETFs of ETFs, right?
Or you could just buy VT, right? Isn't VT like pretty much almost every stock in the entire world?
In the world, yeah. But it is like 65% US, just because of, like you said, the overvalue of the US has brought it up so much. So if you're looking for international exposure, don't buy VT alone. If you own a lot of US stocks, buy something else.
Yeah.
Right.
There is a site I got years ago, and I haven't used it since. I don't know why, but I think there's something that so you could put in all those and it'll show you the overlap. Like it'll show you overlap with ETFs or funds. So that might be
overlap. Like Google the two ETFs and put overlap and you'll get it. I can't remember.
Yeah. Cause like, think about it. If IDVO and I don't know, IGRO had like a 60% overlap or something, like it's almost might be redundant. Just hold one, but
I would try to pick two. Try to pick two with two different strategies, maybe, instead of going for,
Bubble says buying ETFs on crypto, just buy it yourself. Yeah. Same thing with people that want to buy MicroStrategy for Bitcoin exposure, just why?
The leverage. I want the leverage.
Just buy Bitcoin. Michael says, give me $20. I'll give $18 of your own money back and charge you 1.36% for the privilege. But that's too straightforward. That's too straightforward, Michael. It has to be much more complex than that. You can't just be that straightforward. So, yeah, I don't know. I don't know if I'll ever invest, but dude, not for me. Yeah, your guy Sut says I'd use JEPQ dividends to purchase more shares of SCHD and SCHD. Yeah, and it's funny. We've done those before, Suts. I'm not saying it's wrong, but I'll do a total return comparison between JEPQ and the Qs. And almost every time frame, the Qs outperform on a total return basis with dividends received. But I guess it matters what you're doing with those dividends too. And he's asking, is YieldMax a Ponzi scheme? No, I don't think so. I think they're just giving you your own money back. So Ponzi scheme is when the people that paid in first are getting money from the people that are just putting in, and then they get out, and then those people have to get in. And
it's a shell game. They just keep moving it around.
Yeah, so I don't think YieldMax is a Ponzi scheme. I just think it's preying on people that are chasing yield. Is my opinion, for whatever that's worth. What's up, Dividend dude?
What's up, buddy?
It's been a minute. I'm not as active on Twitter anymore. I didn't pay up for the blue check, so How's that going, by the way? You making bank off that yet, or can you disclose any of that?
I'll make a little bit of money. Yeah, it's nothing so far. I mean, it took a while to get like enough impressions to get paid, but now I'm starting to get paid. It's coming a little bit at a time, and it's better than
you only
nothing.
have to what do you got to do, tweet about 136 times an hour to get that?
You need 5 million impressions in 90 days, which is a lot, like 55,000 a day, it's a lot. So yeah. But you can have something go, like something good could catch you like 100,000 views all of a sudden out of the blue, so you never know.
Yeah, you got to try. International ETF lineup for Andre is VXUS, IDVO, BOAT. I don't know BOAT, and UIVM. All right, man. Thanks for. Yeah, I don't know BOAT. Have you ever heard of BOAT? I got it. No. That's a weird one. I don't know. I'm afraid to look it up. Just it's a shipping ETF. Well, that makes sense. Clever. Yeah, it's got a yield of 14.91%. So, yeah, I don't know, man. Shippers, I think you've heard that, right? About the containers coming in that are down. They're emptier, not empty, but I think, man, companies usually have a lot of inventory to work through. So I think when they burn off all that inventory, that's when we're going to start seeing problems. But BTCI, Gabe, That's a bit. I'm guessing Bitcoin income. I
Yeah, I
don't
think
know. That's
that's
what
from
every time
Neo,
I see the eye.
the same one that does SpyEye and QQI. I like those ones. Those are some of the better ones.
Yeah. Oh, Dividend, dude. Yeah, you've done well on X, man.
He's doing really well. He's
Yeah,
doing
you've blown up on that.
Mhm.
I guess the way to not blow up on X is like yours truly. I would sometimes post like 2-3 times a week. So,
Mhm.
but
Just be consistent, a couple times a day, 2-3 times a day. It's good.
yeah, I've been enjoying Blossom. I like Blossom because
Blossom, I should do that more. Blossom is good.
it's from Canada, man.
Yeah.
What's
I'm
all
there.
these Canadians on there? They're trying to expand more, so it's like I was like,
Mhm.
God, what's it with all these Canadians
I
around
do
here?
like it. It's a good concept, and
Yeah,
every time I
I
post there, I'm not even there a lot, and I get a lot of interaction, even when I post like once a quarter.
I didn't even. I don't think I follow you. I didn't even know
Oh,
you were
really?
there. But
Yeah, I'm there.
um, yeah, I tagged you, but I didn't put your. I might have put your name in wrong. Uh, yeah, I like that it shows the portfolio. So when I buy something, it'll record it and it'll update my
You have
portfolio
it
so
auto
people
set
can.
up to auto share, like when you buy something.
You don't have to. Yeah, I just turned it on and connected it to
Yeah.
Schwab, so they get to see the data from that. Does
Mhm.
as Sobo have a safety score yet? I don't think so, man. I don't know.
Here,
Um,
I can look that up if you want to keep looking
yeah,
at that.
wallet. I think Well, I mean, let me look at VXUS. I would say VYMI. So that's the high yield, but VXUS is the total international. Oh, that's a yield of 3%. You know what, man? I might have to.
Stocks have good yields. That
Yeah.
I'll answer the other question while you're looking at that. That SOBO has a 50 dividend safety score, borderline
Okay.
safe. Canadian
Here,
company.
check this out for. This reminds me of the Rockies. This is the dividend growth for VXUS.
And that's
Uh,
that's like VTI,
yeah.
but non-US. They just cut out US stocks, but it's like the whole world except for US. So that is
Right.
diversified. So
Yeah.
you're gonna get whatever's happening out there. So there's nothing sure about the dividend there, but I mean it'll pay one.
This is what I should have let off with, man. I should have let off asking you that how many shares you had. I forget to. That's
Yeah,
impressive. I'm up.
7,447 now.
I am up to I think 550 something. So
There you go.
I keep thinking sometimes I should just consolidate other things into that, but maybe someday. I don't know. Oh my God. Can you believe it's almost been oh, Suts, you're on Blossom too. There you Oh, how many shares do you buy a quarter or a month?
It
Gil
varies. I
wants
mean,
to know.
this year it's been about 300 a month lately because I have been consolidating, and I've been doing that for a while, like consolidating other stuff into it. So yeah, about
There's another VTI brother of mine. Yeah, I have a position in VTI just in our taxable, no, not the taxable, in the Roth and the self-directed IRA. So it's a little bit redundant because I also have mutual funds. Like a big chunk of our net worth is in DFUSX, which is I'm able to pick in my mutual fund or in my 401k. That's the mutual fund of the S&P 500. So yeah, that's. Oh yeah, John, you checked it out in the newsletter I shared. From Zach's. So if you don't get the newsletter, you can just go to dapperdividends.com, click newsletter, and yeah, it's Tracy Reineck. She's from Chicago. I think I've talked to her once on Twitter, but yeah, she's works at Zach's, and she did a bunch of dividend stocks that have high yield, and whether they think they're good buys or not. So yeah, you're right. CVAX was one of them. So. Well, holy cripes. We oh yeah, thanks, Mike. It is dimensional. That's DFUSX. So what are your plans for today or tomorrow or this week or the next
Oh, you know
several
what?
years?
Next weekend I'm running in a 100-mile relay with 6 other people from the top of the Keys to the bottom. So Key Largo to Key West, the entire Keys, and it's going to be hot. And you run like
100 miles.
3 miles, and the next person they run 3 miles. And so like 5 people go and then you go again. So like pretty much I'll run like every hour, another 3 miles, 3 or 4 miles kind of thing until we're done.
You lagged right at that part. So you're not running the whole 100 miles then?
No, just
okay. I was
3
going to
miles.
say like, I was going to ask you if you could just pull down your shirt so we could see if you had an S on your chest, if you're going to be running those, you know.
No, but people do it. There's some people, we're doing it as a relay, and there's other people that do it by themselves the whole time. It's insane, man.
Yeah, I think that's insane, quite honestly. But hey,
but
you know
hard.
what? I got to show you something. I'm not a runner now, right? But we were out shoe shopping a couple weekends ago because I don't know. Daddy must be getting older, but if I walk a long distance in my beloved Chuck Taylors, I've been having knee issues and things like that. So like for a day or two afterward, apparently when you're in your late 40s, it's not good to go walk miles wearing a slab of rubber strapped to your feet. So yeah, we went to the Nike clearance center, to Puma, to Adidas, to the Converse outlet. And the best pair I found was these guys right here. They are
Yes.
they're Adidas. I think they're a running shoe. And they are comfortable as hell, man. And it's funny because I tried on a bunch of stuff in the Nike store. And I told my wife, I'm like, yeah, I don't like how any of this fits. And I said, why the hell do I own all these Nike shares again? But yeah. Anyway, but there was a ton of people there lined up at the cash register buying stuff in the Nike clearance store. So, and Dan, I'm going to finish.
What's that? I was just going to say I was at Disney last week and it was packed and I wore running shoes and thank goodness I did. It helps.
Yeah. Yeah. Anyway, no, I don't say anyway, like you're like, I just had this amazing thing. I'm like, yep. Anyway, Dan says, are you limiting to international dividend ETFs, Russ, or any? I wanted a dividend focused international ETF. So yeah, that's kind of what that was about. Yeah, Michael, dude, I hope it works out for you, man. You've been banging that drum for Pfizer for a long time now, and hey, I'm pulling for you, man. It's not for me. I'm not going to invest in it, but what do I know? Look at me. I've been in NextEra for over almost 3 years now, and it's just been flat as a board. And then even if Russ isn't buying Nike, it's time to sell. Probably, Steve. Just do the inverse of me, like they have the inverse Kramer ETF. Just do that. And then Eddie, I want to end this with this. Yes. I haven't gone there yet, man. They did have a store.
I'm getting tempted.
I wasn't tempted to go in because you know what? I did tell my wife. I said, you want to go in the Skechers store? And she said, my grandma was wearing Skechers. I was like, yeah.
They're not even cheap anymore. Weren't they used to be that they were like cheap, like value? They're not. They're expensive now. From what I hear.
Don't lie, dude. Come on. You're wearing. I ain't even going to ask to see your shoes because I know you got a pair of Skechers on. So whatever. You can tell us you're not wearing them. That's fine. All right. Anyway, yeah. We'll get off with this.
Disney, not Nike. Disney over Nike.
Q, we'll see. Oh, I didn't even say that. Disney or Nike. Man.
Disney, buddy. Disney.
Yeah, I think I'd have to go with Disney just because they have more streaming. They've got the parks. They've got the IP for the characters, all that. If I had to pick one of the two, I guess I'd go Disney, which makes me wonder then.
Abu Dhabi.
Yeah, and that's a franchise. They're not even going to have to put anything up. There's a company that's going to run it for them.
Right. They're just like lending them their name and going to get paid like billions for it. It's incredible.
Yeah. So it's funny as those words spilled out of my mouth, I was thinking like, if I had to choose between Nike or Disney, I'd own Disney. And I was like, why don't I own Disney? Why am I owning Nike? Well, I guess you made me think, Michael. So congratulations for that. And Dan, I will end with you this time. Exposures too much to banks. What's that?
That's a good point. That's a good point. VYMI has, I think it's like 40% financials or something. So that might be a reason.
Look into that right now. I didn't screen for which one has the least amount of bank exposure. So, all right, we'll see. You guys be nice to each other, Michael and Q. We'll see what happens. Yeah, we'll see tomorrow if the pharma stocks do get cooked or whatever. But Craig, man, thanks again for coming on. I
Thank
really do
you.
appreciate it, and it's always a good time. And
Yeah, man, I love it. Thanks a lot. Thanks everybody with all the comments and everything. It's always fun. Appreciate it.
all right, so I'm a little bit late here. Here we go. I'm trying to cue this up. So yeah, we're both kids of the '80s. Did you watch Pee Wee when you were young?
Yeah, of course. I love Pee Wee.
Beautiful. Well, we're going to go out with him. So thanks again. And everybody, thank you so much for hanging out. We'll see you next week.
Ooh.